Hello and welcome, everyone. My name is Dane Menke. I am the Digital Marketing Manager here at Regenesis and Land Science. Before we get started, I have just a few administrative items to cover. Since we're trying to keep this under an hour, today's presentation will be conducted with the audience audio settings on mute. This will minimize unwanted background noise from the large number of participants joining us today. If the webinar or audio quality degrades, please try refreshing your browser. If that does not fix the issue, please disconnect and repeat the original login steps to rejoin the webcast. If you have a question, we encourage you to ask it using the question feature located on the webinar panel. We'll collect your questions and do our best to answer them at the end of the presentation. If we do not address your question, someone will make an effort to follow up with you after the webinar. We are recording this webinar, and a link to the recording will be emailed to you once it is available. In order to continue to sponsor events that are of value and worthy of your time, we'll be sending out a brief survey following the webinar to get your feedback. Today's webinar will focus on how businesses can leverage historical general liability insurance policies to pay for environmental cleanup costs. With that, I'd like to introduce our presenters for today. We are pleased to have with us Ben Pariser, Principal at Restorical Research LLC. Ben brings over 20 years of experience in the real estate, construction, and development fields to each project. He began working in the construction industry at a young age, building his first house while in high school. He went on to develop and construct single-family and multifamily master planned communities, as well as commercial, retail, office, hotel, and private utility projects that spanned 4 states and 12 municipalities. He has experience across the spectrum from managing teams of subcontractors to negotiating acquisitions, executing contracts, and coordinating the build-out of multi-million-dollar developments. We are also pleased to have with us today Keith Munsey, Northwest Technical Manager at Regenesis. Keith Munsey has worked in the environmental remediation, research, and consulting industries for over 11 years. He supports groundwater and soil remediation projects in the Western US and Canada, and focuses on sites with chlorinated solvent, PFAS, and petroleum hydrocarbon impacts. Keith Munsey has project management, compliance reporting, and analytical experience throughout the United States and in Central America. Prior to Regenesis, Keith worked in environmental consulting for 3 years, and prior to that spent 4 years with the Florida Department of Environmental Protection. All right, that concludes our introduction. So now I will hand things over to Ben Pariser to get us started.
If your site has contamination and it's going to cost millions of dollars to clean up, you don't have to pay for that. Restorical saves our clients millions of dollars each year, and in this presentation, I'm going to explain how. And by the way, we only get paid if we're successful. We like to refer to insurance policies as hidden assets. This client inherited this property along with a dry cleaner that had been there for 60 years, leaving behind a tremendous amount of contamination. Insurance paid over $4 million to clean this site up, and that includes the Regenesis product that helped achieve an NFA. I'm going to explain this over the next few minutes. But first, I was like a B student in college. I did not get a law degree. I am not an attorney, I'm not your attorney, and I'm happy to validate any parking if that's necessary. What are we talking about here? We're talking about if your contamination is old, you want to use an old insurance policy. Industrial and commercial cleanups that are very expensive and very complex can be paid for with insurance policies that are 50, 60, 70 years old. This is one of our clients, and this is a batch plant producing asphalt and concrete going back to the 1930s. Our client purchased the business in the 1980s through a stock purchase. And when they did that, they acquired all of the historical insurance policies of the prior business. We helped them use those policies to recover the money they spent cleaning this site up, over $2 million, nearly 7 years after they finished the cleanup. PFAS was developed in the 50s, and it found its use in applications at places like airports and throughout firefighting industry. Throughout the 60s and the 70s, AFFF and other PFAS components found itself being used throughout the United States. Nowadays, we're finding PFAS for the first time in many places, but this PFAS is not new, it is old. It may not sound correct that you can use an old policy to find a contaminant that you just discovered, but I'm going to explain exactly how this works. In the 1930s, the insurance industry had a problem. Business owners, property owners, didn't buy a lot of insurance. It was expensive and it was time consuming. If you were a property owner and you wanted to protect yourself from a liability, you had to know what that liability was, and you had to get the insurance broker out to your property. And you would say to the insurance broker, I would like to protect my property from wind damage this year. The insurance broker would then write a manuscript policy that protected you for 1 year from that one liability, wind damage. And what usually would happen is you would have no wind damage that year, but something else would happen, a different liability. Someone would slip on your property and sue you because they broke their leg, and you had to pay for that, and it wasn't covered by insurance. So property owners did not buy insurance from insurance companies, and insurance companies were not selling insurance, and they were losing a lot of money. So the insurance industry thought about this throughout the 30s, and they decided in the 40s that they were going to change that. It's important at this point to understand that insurance policies are contracts. The contract says that the insurance company is going to provide protection or compensation for losses, and in exchange for that, the policyholder is going to pay the insurance company for that protection, and that's in the form of premiums. Why am I making it a point to tell you this? I'm making it a point because the insurance industry created the general liability policy in the 1940s, and that policy, it was a contract, and that contract took specific care to make sure that it would provide broad coverage for unforeseen events. The carriers made these policies, these contract occurrence policies, which meant that if you had a liability that occurred during the policy period but did not discover that liability for 1, 2, 15, 30, 40 years in the future, you could go back to the policy period and you could tender a successful claim. And they sold these policies like hotcakes to property owners throughout the United States. This is a 1943 Maryland casualty advertisement. It's called the Boomerang. And it literally said in the advertisement as a header, unforeseen events need not change and shape the course of man's affairs. These policies were affordable. They provided a tremendous amount of coverage, and property owners throughout the United States purchased these policies. Governmental property owners, private property owners, all the same. This is why the policies were developed by the insurance company. This is how the insurance company advertised their sale. And again, this is a contract which is going to come back and be very important. In 1969, the Cuyahoga River in Ohio says, "Hold my beer." And it lights on fire for the 13th time in 80 years. The picture on the left and the picture in the middle are for the fire that occurred in the summer of 1969. This fire didn't cause a lot of damage. It was put out in 30 minutes, but it was featured in a Time magazine article about a month later. The Time magazine article went into great care to explain that this river catches on fire every so often, and it's because the petrochemical companies upriver are dumping their contaminant into the river indiscriminately because there's no laws to protect the environment. On the right-hand side is a political cartoon from 4 years earlier from the Cleveland High Plains dealer, and it is showing what everybody knows, the open secret, that this waste product from the petrochemical companies is just ending up into the river. This was taken up into the nightly news, and the American public was outraged. 4 months later, Richard Nixon becomes our first green president, and he writes into law legislation that creates the EPA. The EPA then empowers the states throughout the United States. In this presentation, we're focusing on Washington, Oregon, and California, but every state in the United States developed their own state agency. Those state agencies relied on the federal government for their charter, and those state agencies and the federal government sent out tender letters requesting that property owners clean up their contamination. And they sent it to the Fortune 5,000 property owners across America. They said, we do care about the contamination on the site that you own right now, and we also care about the contamination on the site that you sold 5, 10, 15 years ago. Clean this up. These large corporate interests, some of them are shown on the slide, they went to their attorneys and they said, get us out of this. The attorneys said, hey, the same policies that we bought to protect us from unforeseen events like slip and falls, they don't have a pollution exclusion. This is an unforeseen event, unforeseen liability. Let's go tender these claims. And what did the insurance companies do? They denied coverage. What did the businesses do in return? They sued the insurance companies. That's early 1970. By the year 1970 is out, in every single state, the Supreme Court of that state heard these arguments, and in every single state, they ruled against the insurance company. And you can use a pre-1970 general liability policy in every single state in the United States to some degree. The result was the insurance companies freaked out. And so what they did is they decided they were going to create the very first pollution exclusion. This is the qualified pollution exclusion, and it basically says in 100 words or less, we don't care where the pollution comes from, we don't care where it's going, we're not paying for anything. And then it says, but this exclusion does not apply if such discharge, dispersal, release, or escape is sudden and accidental. Some of you may remember conjunction function, not this, but that. I'll give it to you the way that this really comes home for me. I have a 14-year-old daughter. When she was 9 years old, she came home from school. She said, Dad, do you know that when you say but, it means everything before that is a negative? I said, I don't know what you're talking about. She said, when you told me you liked my dress, but I know that you actually don't like my dress. And besides me realizing that she's smarter than me, she made a lot of sense. And that's exactly what this exclusion is saying. Ignore everything before but, and look at the last sentence here. This exclusion does not apply if such discharge, dispersal, release, or escape is sudden and accidental. The word sudden, the word accidental is highlighted, and we'll talk about that in a minute. So what happened? The carriers are getting nervous about that exclusion, about the word but, about the fact that sudden and accidental are not defined in the policy. And remember, the policy is a contract. The contract was constructed and authored by the insurance companies. So when there's ambiguities in that contract, they go against the author of the contract. In 1985, while we were singing We Are the World, the insurance industry came out with a new pollution exclusion, and they referred to that exclusion as the Absolute Pollution Exclusion, APE, and they took out the Qualified Pollution Exclusion, and they put in the Absolute Pollution Exclusion in April of 1985. This exclusion had all of its terms defined and was much narrower in scope. In most states, in 48 states out of the United States, this exclusion holds water. In New Mexico and Indiana, this exclusion doesn't hold water. And if you're in those states and you're paying for contamination, you should look to not pay for the contamination. You can use policies in the last 10 years to fund your cleanup. From the 1990s through the 2010s, and still to this day a little bit, in Washington, in Oregon, and in California, these large corporations with a lot to lose because of contamination sued their insurance companies about the words sudden and accidental and but in that qualified pollution exclusion. And they were very successful. In Washington and Oregon, they won just about every case. The laws in Washington and Oregon are some of the best laws in the United States for using these old insurance policies as a policyholder. And that is because Washington and Oregon are industrial manufacturing states. Weyerhaeuser, Packard, Boeing, Schnitzer, Zidell, these companies had the money, the wherewithal, and the clout to sue these insurance companies and be very successful. In California, it's a much more diversified economy, and so they were successful partly, but not wholly. So the best states are Washington and Oregon, but you can still use these policies successfully in California. And the bottom line is you don't have to litigate these claims because these large corporate interests already litigated these claims, and each of these states have laws at the Supreme Court level which tell you how you can use these policies successfully. So again, here's a quick graphic. I threw Idaho in there because Idaho is a very bad place to use these old policies because there are not a lot of laws at the Supreme Court level in Idaho. Collateralizing insurance. Our client is a developer in the bottom right. They built that building after they purchased the dry cleaner at the top. They purchased that dry cleaner, which began operations in the 1950s. They bought it in 2018. And then we went out and we found the insurance policies, not from the seller and not from the prior owner, but from the prior owner in the 1970s and 1980s. We helped our client, the buyer, collateralize the insurance, and then insurance paid over $6 million to get that dry cleaner cleaned up and build this beautiful building. And this is a graphic explaining how that happened. In 1950, the dry cleaner started operations. And because of the nature of dry cleaners and because of the nature of gas stations, because of the nature of how things like PFAS was applied, they were unintentionally polluting the groundwater. And that's what the dry cleaner was doing. They had no intention of causing contamination. They didn't know what they were doing was harmful. This is a standard business practice to go out the back door and dump their trays at the end of the day. Just like it was a standard practice to use AFFF in fire exercises. Just like it was a standard practice to put contaminated materials into an unlined landfill. So here you have a dry cleaner that began in the 50s. It's in operation every single day. The contamination is occurring and it's moving and migrating. We found the policies from 1979 to 1983. Those policies were in place as the contamination occurred. And if you remember back to the boomerang example, they are paying for unforeseen liability. This is an unforeseen liability, and this is how you show that the contamination occurred during the policy period. Fast forwarding to 2018, we helped our client, the buyer, go back and find these policies and make them available so you could have coverage. And again, there is nothing extraordinary about these policies. This is exactly what the policies were written for by the insurance company. This is exactly why businesses purchase these policies. Businesses that had landfills and auto dealerships, airports, fire stations, universities, so on and so forth. How do you do that? How does it work? You do it through an assignment of claims. If you've ever had a broken windshield and you've brought it to the car dealership to replace your windshield, you've had someone ask you, would you like to run this through your insurance carrier? And most of the time you say yes. When you say yes, the auto dealership hands you a document which you sign. And if you read that document, you would read that what you are doing is you're signing the claim of your broken windshield to the car dealership, and you're naming the car dealership as your agent to pursue your car insurance. And that's exactly what they do. They tender this broken windshield claim to your insurance company with the authority that you've given them, and they are able to receive money from the insurance company, and in exchange, they replace your windshield. And that is exactly what we do on contaminated sites. You cannot, in most cases, assign insurance. So when someone yells at you or says that, the guy you heard on the webinar wasn't speaking the truth, you can say, fine, it's not an assignment of an insurance policy, it's an assignment of the claim. And this you can do. Restorical helps our clients do this on a daily basis. It is very successful. Landfills are a major source of contamination, and we're now finding out this is a major source for PFAS. All of these landfills before 1970, and certainly in some states before 1985, purchased this insurance, either through the city's insurance policies or the county's insurance policies, sometimes the state's insurance policies. You're going to hear, well, we've always been self-insured. Very rarely have these agencies, these governmental entities, been self-insured all the way back through the 40s. And if they were self-insured, they might have had a self-insured retention, and then they went out and they purchased an umbrella policy on the commercial market. At Restorical, we've had great success helping governmental entities find these policies, which are not part of risk cooperatives, and helping them use these commercial policies to clean up landfills that were closed down 40, 50 years ago. Right about now, you want to see a cute puppy. I understand this is a conversation that's a little bit deep. but let me assure you it is worth your time and we're almost done. The benefits of these pre-85 insurance policies are that they do not expire. There is no statute of limitations. Most of them do not have a deductible. You can use them functionally for funding and recovery. And in our belief, you can do this without litigation if it's done correctly. These are all of the drawbacks to using a pre-85 insurance policy. Seriously though, there's no reason why you shouldn't use a pre-85 insurance policy to help you on your contaminated site. You may hear some things that would preclude you from using these old insurance policies, and we'd like to think of these as myths. Again, there's no statute of limitations. Going back to the contract, they made these contracts so that if you could show that the pollution occurred during the policy period, the insurance company is supposed to come and protect you from that liability. There's no deductible, there's no increase in premiums, and for whatever the reason that your brother-in-law says that this isn't going to work, have your brother-in-law give me a call. I'd be happy to talk to him. We do this all the time. What makes our company different? We are a sole source provider of our services. There's no other company that does what we do. We have no conflict, number one. We do not work for insurance companies. There's no other firm that can say that. There's no risk. Our fee is tied to our success, and we unlock the hidden assets. We are going to work with our clients from the beginning, finding these policies, developing strategies to use these policies, working with their legal counsel, managing the claim. Once the tender has been successful and funding has been provided, we have an in-house accounting team that will make sure the monies are going to the right place and your site is being cleaned up. We use this proven process on all of our projects and very high value right here. Task one is where we go out and we find these policies and put together the strategy. We can usually do this in about 4 months. We charge a nominal fee. If you decide that you want to move forward after we give you a yes, we will work with your legal counsel, and then we will work on a contingency fee until coverage has been obtained and we have your site being funded or paid back or sold or purchased. This is a quote from Miles. He owns a large car dealership in Washington. He was very skeptical too, and we were able to recover $1.5 million for Miles. I'm now going to hand this over to Keith Munsey.
Thanks, Ben, for the detailed information on how funding resources can be uncovered with Restorical. Once funds become uncovered, it's important to understand what options are available to meet your goals. My name is Keith Munsey, as Dane mentioned. I'm the Pacific Northwest District Technical Manager with Regenesis, and I want to briefly talk to you about cost-effective and time-sensitive remediation methods. Regenesis offers a range of remediation technologies that can be used efficiently and effectively to treat a range of contaminated sites, including impacts from petroleum hydrocarbons, chlorinated solvents, and PFAS. Regenesis technologies have been successfully implemented at 40,000 sites worldwide, at such sites as brownfields, redevelopments, airports, gas stations, and manufacturing facilities. Of the projects Regenesis has worked on, over 25 sites in California, Washington, and Oregon have had legacy insurance policies uncovered to fund cleanup efforts with the help of Restorical. Thanks to over 2 decades of research and development and in-field testing, Regenesis offers several different remediation technologies to provide different pathways for contaminated soil and groundwater remediation, such as in situ chemical reduction, in situ chemical oxidation, both anaerobic biodegradation, and in situ sorption using colloidal activated carbon. Depending on the level of contamination, there is typically more than one approach or combination of technologies to treat a contaminated site to reach site-specific goals. Regenesis technologies are engineered to be injected easily into the subsurface under low pressure conditions. The goal with these injections is to create an interlocking radii of influence with the ejection points, most commonly in a grid pattern to treat source mass or as a permeable reactive barrier to intercept contaminant mass as it flows through the barrier, preventing off-site migration and or increasing the residence time of contaminants in the treatment zone. Once the site has been identified, the next step would be using the existing site conceptual model to understanding site lithology, groundwater flow characteristics, and contaminant pathways to develop remediation designs using remediation technologies. Understanding the site-specific conditions is one part of the equation, but another part is understanding the cleanup criteria or the cleanup goals. The different technologies can be used to treat the same site with a range of different levels of aggressiveness. So let's look as an example as it pertains to a site impacted by chlorinated solvents. A site impacted by PCE can be treated with different alternatives depending on how strict the cleanup criteria is. So for this hypothetical scenario, PCE is located underneath a formal dry cleaning facility. And in the first scenario, the goal is to use an existing budget to make some positive impacts on the groundwater conditions. And the focus is to use a small portion of the allocated funds to clean up the impacts, and timing is not critical. In this scenario, using a multi-stage release electron donor and a bacteria consortia would promote reductive dechlorination effectively for a long period of time and at a relatively low cost. In the other scenario, not only does the landowner want to expedite the cleanup timeframes, but they would also like to eliminate all contaminant migration off-site and reduce daughter product formation. So here we can use a colloidal activated carbon barrier, or plume stop, to be installed downgrading of the source zone to provide a high level of contaminant protection of off-site migration, and sulfidated micron scale zero valent iron can be added in the source area to enhance productive dechlorination and also provide a pathway for abiotic destruction by bypassing daughter product formation. Due to the varying levels of aggressiveness, costs can vary, but this is important because understanding your site-specific goals and budgets can help make sure that you're getting the most appropriate remedial action that aligns with the site's goals and insurance thresholds. During bin stock, we heard about the need to uncover funds for PFAS impacted sites. And as we continue to discover more PFAS impacts nationwide, understanding where the funds are coming from to treat these impacts will continue to be a major question in the industry. There's an estimated 50,000 PFAS sites in the US that require remediation, and approximately 100 PFAS sites worldwide that have begun that process, with over 70 doing so with in situ methods. The leading method for in situ treatment is using colloidal activated carbon, or plume stop. Plume stop is milled down to 1 to 2 microns in size and suspended in a polymer to enhance distribution in the subsurface using low pressure injections. Plume stop can be applied to treat chlorinated solvents and PFAS compounds by converting the underlying aquifer into a purifying filter. There have been a number of third-party assessments into the effectiveness and longevity of a colloidal activated carbon treatment. In this specific study from Grant Carey, he reviews 17 PFAS sites treated with plume stop, with data ranging from 4 months to about 6 years, and showing 90 to 99% reductions in 16 of the sites, even with co-contaminants present. Using derived Freud-like isotherms for key PFAS species, he modeled longevity of the barriers, which showed between 66 to over 200 years of performance, depending on the dosing of the barrier. This paper also highlights that reducing the incoming flux of contamination by controlling the source area can significantly extend a barrier's lifetime. Regenesis offers SourceStop, which is a highly concentrated solution of colloidal and powdered activated carbon that can be injected into the source area at the capillary fringe or into the vadose zone to significantly reduce the leachability of the source material. Other methods of PFAS remediation that focus on ex situ extraction rely on bringing the contaminant to the surface, which in many cases involves disposal and transport, which can not only be costly, but also challenging to find a facility to accept that waste. But it can be also a way to introduce potential contaminants throughout the transportation cycle that can increase circular liability. This would also increase its potential to have impacts to human health. And with in situ methods, there is no initial or ongoing waste generation to spread that liability, and there's really just a small temporary footprint during the initial process. There are numerous pump and treat sites nationwide that have been in operation for decades with no cleanup end date. These systems are costly and require ongoing maintenance and operation and power supply. In situ applications have a relatively short infrastructure footprint and can be designed to be a one-time injection while also coming in at a fraction of the cost. This paper by Jeremy Bernstein compares the cost of 2 PFAS remediation methods at Wordsmith Airport Base. Pump and treat and both in situ colloidal activated carbon barriers were analyzed here, with a barrier option coming in at roughly 62% less over the 30-year lifespan of the total project cycle as compared to pump and treat. These barriers are designed to passively trap PFAS underground with minimal maintenance, while pump and treat requires the continuous ongoing operation and generates waste. Here are 3 other sites where cleanup costs have also been evaluated. We have an airport in the UK and a fire training facility in the Midwest, with both savings estimated at about 1/3 of the overall project cost for PFAS treatment. The third example is from a high-mass chlorinated solvent plume in Nevada. Worth noting here that at this location, the cost savings here is about 50% at the time of injection, because this calculation is assuming the cost of the expansion and the continuing O&M of an existing system, and not actually including the initial installation of the pump and treat system. So overall project cost could look a little bit different with that initial system setup calculated. Not only is cost associated with in situ generally much cheaper than ex situ methods, it also leads to more rapid cleanup timeframes. This is due to contaminant mass that sorbs into the low permeability zones and then back diffuses into the plume over time. Extraction systems are required to purge thousands of volumes of water from the aquifer in order to flush those contaminants out of the system to reach that cleanup criteria. This study here shows key PFAS species needing at least 30 years to reach their cleanup timeframe. When designing in situ remediation plans, Regenesis accounts for both back diffusion and contaminant mass flux, and those values are incorporated into the design process, allowing for site-specific dosing calculations. So some key takeaways here are resources like Restorical can uncover available insurance policies to fund remediation. Regenesis technologies can provide remediation plans specific to your site's goals, budget, and timeline. In situ remediation requires a small temporary footprint and does not generate waste over the project lifespan. And Regenesis colloidal technologies can expedite cleanup timeframes and greatly reduce project costs compared to other remediation alternatives.
All right, thank you very much, Keith. So that concludes the formal section of our presentation. And now at this point, we'd like to shift into the question and answer portion of the webcast. Before we do this, just a couple quick reminders. First, we will be sending out a brief survey after the webinar. We really appreciate your feedback, so please take a minute to let us know how we did. Also, you will receive an email with the recording as soon as it is available. All right, so let's circle back to the questions here. Let's see, first question is for Ben. Ben, the question is, wouldn't the insurance company have the policy?
That's a great question, thank you. Generally speaking, no, the insurance company does not have the policy. The insurance companies are not required to save these policies. And the handful of carriers that do have a good archive are not required to turn this material over unless you present to them enough evidence that that policy exists.
Okay, thanks, Ben. So here's a question for Keith. Keith, the question is, at what point in the project can Regenesis get involved?
Yeah, Regenesis can get involved at any time, but generally earlier the better. Getting into the process early allows us to make recommendations on sampling parameters, collecting flux data, treatment placement, and really just understanding the project lifecycle and where potential new wells can be installed. We're happy to discuss the site at any stage of the project, but getting involved early helps us set things up for success.
Okay, so let's see. Here's another question for Ben. Ben, the question is, am I able to sell or buy a property even though it is polluted?
The answer is yes. If we can find the old insurance policies, we are able to collateralize those policies for a buyer. That buyer could be yourself, or you could be the seller wanting to sell your contaminated site at market price without a diminution in value. And so you would use these old policies as a financial backstop to reducing the value in the transaction. And that would be using an assignment of claims provision in the purchase and sale agreement.
Okay, thanks, Ben. So here's another question for Keith. Keith, the question is, what is the most useful piece of data when designing a permeable reactive barrier, or PRB?
Yeah, good question. I would say one of the most useful data sets would be the passive flux data that I mentioned, especially for barriers. We offer a flux tracer tool, which allows you to place a device into the well, ideally a well where the barrier is going to be installed later on. And this will passively collect depth discrete groundwater velocity and contaminant mass measurements, which together allow us to calculate contaminant mass flux. This data helps us define vertical barrier placements and calculate barrier contaminant loading rates, and both of these are important for designing long-lasting barriers.
Okay, thanks, Keith. So here's another question for Ben. Ben, the question is, why does Restorical focus so much on site history, ownership, and operations?
Every one of the projects that we work on, we want to recreate the past so that we have a very clear idea who the owners and operators are. We usually do this through title product, and this is to confirm any information that might be in a phase one or through addressing and such. And the reason for this is that the federal law, CERCLA, and then the state adopted laws are fairly clear that if you're an owner or an operator of a contaminated site, you're liable, and most times joint and severally liable. So that joint and several liability that applies to those owners and operators would also apply to their insurance policies. So by getting this detailed information, not just on the ownership, but on the operators and leasehold interests and all that other information, we now have the targets for who we want to pursue as far as insurance policies before 1985.
Okay, thanks, Ben. So here's another question for you, Ben. It's, do Restorical's clients' insurance premiums go up after a claim has been paid out?
I've been an owner of this company for about 14 years. The company's been around for about 23 years, and we've never had a client tell us after the fact that we've helped them recover monies under these old policies that their premiums have gone up. So we've never seen that, and that's after thousands of claims. And to clarify, I believe the reason why is that the insurance companies have effectively mitigated the ability to make these types of claims under their current policy. So when you're buying general liability insurance today, it's unlikely you can make a successful claim because they have exclusions and definitions in those policies.
All right, thanks very much, Ben. So that is going to be the end of our chat questions. If we did not get your questions, someone will make an effort to follow up with you. For more information about services from Restorical Research, you can visit restorical.com. If you would like to learn more information about remediation solutions from Regenesis, please visit regenesis.com. Thanks again very much to our presenters, Ben Pariser and Keith Munsey, and thanks to everyone who could join us. Have a great day.
Thank you.